Think about this. You see a high-tech robot walking perfectly in a lab, and you think, that's the future. But behind the scenes, that same robot might be walking its company straight off a financial cliff. Welcome to the 2026 Robotics Deep Dive by HDIN Research. Today, we're not just looking at cool tech. We're looking at who's actually making money and who's just burning through their pocket money at a record pace. Is this a robotics revolution or just a very expensive science project? Here's the game changer. Uncle Sam, or specifically Medicare, decided to start handing out $91,000 checks for personal exoskeletons. Imagine if the government suddenly offered to buy everyone a luxury car. That's exactly what happened here. The market didn't just grow. It shifted from, maybe one day I'll rent this, to, I'm buying this right now. But as we'll see, just because the customers have the money doesn't mean every company knows how to collect it. Now look at the pantry, or as analysts call it, the cash balance. Myomo has enough groceries to last through a long winter. P&S Robotics is basically living in a fortress. But then there's Ekso. They have a hole in their pocket the size of a crater. They're down to about 90 days of survival. In the time it takes you to finish a summer vacation, this company might run out of gas completely. It's a classic case of high-tech meeting low cash. So what's the bottom line? Myomo is the star student. They're growing fast because they figured out the paperwork. P&S is the cautious one. They're making a profit, which is rare in this world. And Ekso? They're in the emergency room. We've calculated a commercial efficiency index, basically a common sense score. Myomo scores a 0.7, while Ekso is sitting at a negative 0.14. That's like trying to run a race while moving backward. Let's talk about leftover money, the gross margin. For every dollar these companies make, how much do they actually get to keep after making the robot? Myomo and P&S are keeping about 66 cents. That's great. But look at the growth. Myomo is up 26%, while Ekso's sales dropped by nearly a third. It doesn't matter how cool your robot is if no one is swiping their credit card to buy it. Robotics is a global game, but the rules are different everywhere. P&S has a massive footprint in the Asia-Pacific region, especially across mainland China. Meanwhile, Myomo had a bit of a nightmare with their joint venture there. Their partner went bankrupt, and Myomo had to basically walk away from those assets. It's a reminder that even the best tech can get lost in translation if you don't pick the right partners. Here is the silent killer. It's called DSO, but you can just call it waiting for the check. Myomo gets paid in about 37 days. That's fast. Ekso, they're waiting over 200 days. Imagine selling a lemonade for $1 and not getting the dollar until 7 months later. You'd go thirsty. This is why Ekso is in trouble. They're great at shipping products, but they're terrible at collecting the cash. Time for some accounting magic. You see a profit, but is it real? Ekso got a government tax credit that made their losses look smaller. Myomo started calling their spending an investment to hide it from the P&L. And P&S? Their profit didn't come from selling more robots. It came from playing the stock market and currency exchange. It's like saying you're a great chef because you won the lottery. We see through the fog. R&D is the soul of robotics. P&S is tiny but mighty. They spend nearly half their revenue on new brains for their robots. Myomo is also pouring money into the next generation. But look at Ekso. They cut their research budget by 22%. When a tech company stops innovating, they're not just saving money, they're giving up on the future. They're basically trying to win tomorrow's war with yesterday's toys. Who has the deepest pockets? Myomo just secured a $17.5 million credit line. That's a lot of rainy day money. Ekso is so desperate, they're trying to merge with a data center company. That's like a car company merging with a bakery because they both use electricity. It's a pivot of desperation. In this market, cash isn't just king. It's the air you breathe. We've mapped them out. Myomo is in the winner's circle because they have the speed and the cash. P&S is the safe choice, slow and steady, and Ekso is in the danger zone. Our analysis shows a clear divide. The winners are the ones who mastered the boring stuff, like insurance paperwork and debt management, while the losers just focused on the shiny metal. What happens next? 2026 is the year of the big filter. We expect Myomo to finally stop burning cash and start making it. We expect P&S to launch a new healer bot, and by 2027, we expect the giants to start eating the weak. If Ekso survives, it won't look anything like the company it is today. The clock is ticking, and the batteries are running low. Our final call: if you want growth, look at Myomo. If you want a safe place to park your money, look at P&S. But if you see Ekso, proceed with extreme caution. This isn't just about robots. It's about business. And as we always say at HDIN, the winner isn't the one with the best sensors. It's the one with the best relationship with the guy who pays the bills. Want the full-page version of this report? We've got the audit checklists and the valuation models that the big banks use. Contact us at sales@hdinresearch.com or visit hdinresearch.com. Don't invest in the dark. Get the data that lights the way. I'm from HDIN Research, and we'll see you in the next deep dive.